Welcome to Grab the Horns. I'm Daniel Cooper. Glad that you could join us today. Let's go ahead and dive right in. We're going to look at Barnes & Noble, ticker symbol BKS. Now, Barnes & Noble proves yet again why the stock is broken. It reported a net loss of $59.4 million and revenues of $1.37 billion in its fourth quarter of 2011. The loss was in the lower range of what analysts were expecting, and the revenue was slightly lower. Previous year loss was $32 million on $1.3 billion of revenue. Loss doubles while revenue increases about 4%. Not a very good thing at all to look at. A few weeks ago, the stock moved from about 9 and then had a huge gap up from 14 to 18 and has traded at around a high of $21 on a buyout offer that is not likely to exceed the $19 range. Now, based on continuing disappointing financials, the stock is nearing that $18 mark. If it breaks below $18 a share, it could quickly drop back down to $14 and close that gap. So that's somewhat concerning if you're an investor in Barnes & Noble or looking to potentially be. So definitely something you want to keep an eye on with a stock like Barnes & Noble, especially when they're reporting the type of earnings that they are and the losses that they are. So keep an eye on what happens here in the next couple of weeks. Make sure that you have an eye on Barnes & Noble, because if it starts to drop, you could see that gap down, and that would be something that could be detrimental to an investment in Barnes & Noble. As always, we hope that this information helps. Go out there, go grab the horns.